Mute myself. Oh, I'm going to start again, guys. I think I was muted there. Welcome. Good morning, good afternoon, good evening, depending where you are on the planet, to the Bull versus Bear webinar. Steve Miley on the call here for Trade Day on, what day is it? It's Thursday, the 28th of July. And we're going to go for our usual regular run through here today. We'll take a look at the calendar, what we've had, what we've got coming up. Take a look at the major news wires. What are the major macroeconomic, fundamental, geopolitical events that have been impacting markets over the past 24 hours, and what have we got coming up today? And then we'll take a look at the charts to see where the trigger points are potentially on the markets you guys tend to trade, that I know you tend to trade, which are the S&P, the NASDAQ, and to a lesser extent, gold and oil. So we will take a look, first of all, at the calendar for the upcoming. What do we have on the macro calendar? Well, GDP today in here from the US. Now, GDP is a big headline number, right? It's a really important piece of data, but it's very, very backward looking. This is Q2 data, preliminary Q2 data for the whole of the quarter. Is it really significant to what we're seeing right here, right now? Well, there is some significance to it. We're expecting 0.5%. On the quarter in here, quarter on quarter 7.9, big move, but 0.5 on the sorry, that's on the price index. Quarter on quarter for GDP, looking at 0.5% positive. So yeah, it's going to be an interesting one, but nevertheless, that's not really a big focus for markets right here, right now. You know, we're not going to be in recession yet, but you know, we're obviously looking for somewhat of a slowdown. But what's probably more important, I'm going to go to the FX Street calendar because they've got that on here now. I think this is right. So tomorrow we get the PCE data, where we get this the month-on-month and the year-on-year data. But today we get the quarter-on-quarter preliminary data for PCE. Now PCE is important, obviously, but the month-on-month as well tomorrow. But this quarter-on-quarter data as well, because you know the Fed tell us this is their preferred measure of inflation, right? PCE data. So that's not showing here on the one we have on the site, on the Trade Day site, which is pulled in from investing.com, by the way. This is from the FX Street calendar, which I also cross-reference to, and that is showing that we do get PCE data today on the quarter-on-quarter data, preliminary data, alongside the GDP data. So that's going to probably be more importance than the data we see coming up from the GDP, okay, today. The rest of it, you know, we get a load of Japanese data later today. Japanese data rarely impacting the markets that we're looking at. Let's take a look at the earnings calendar. First of all, a look back. Okay, Meta yesterday, aka Facebook, missed. Okay, and that's dragged markets down a little bit in here. That was after the bell last night. After the strong rally we had post-Fed. We'll talk about that shortly. But Meta, aka Facebook, lower in here, missed earnings and revenue estimates, and that's dragged the market a little bit lower in here. Initially dragged it lower in post-market last night, and we've drifted a little bit lower, maybe a little bit of an exhaustion and a revaluation of the Fed, and we're going to talk about the Fed as we move forward. Before we do that, let's take a look at what's coming up today. A couple of behemoths today. Amazon and Apple reporting. You also get MasterCard, Pfizer, Merck. Okay, actually, we've had Pfizer and Merck already. You see a sea of green in here at the top end. Remember, this is sorted by market cap. So the big boys are at the top. So outside of your Apple and Amazons and also MasterCard, you've had all these guys here report, and there's a sea of green. So positive from all of these guys. Apple and Amazon, obviously the big two, post-bell, after the close tonight, okay? We'll certainly be watching out for them. They can have a big impact, the two of those together, on obviously the NASDAQ and also on the broader market, on the whole sector, on their own individual sectors, you know, the kind of the tech sector and also the retail new media sector. So we'll certainly be watching out for Apple and Amazon after the bell tonight. Right, let's get into Comcast were out as well. Estimates, tops estimates, streaming and broadband subscribers growth remain flat. So that's deemed as a positive as well. So forgot to mention those as well. Qualcomm, Comcast, were also out in here today. Right, 5 things they're going to focus on the Fed. Okay, Federal Reserves have raised 75 as well as expected in here. The market didn't really move. Slight move higher in equity indices after the Fed announcement and after the Fed decision. Okay. However, the real move came when we got to the statement and press conference with Powell 30 minutes later, and we saw a surge higher. And then, so in here, look, some Federal to say markets read Powell's preference too narrowly. And I just want to talk a little bit about that. So the market, so Fed Jack's rates again, Powell vows no surrender in inflation battle. In here, but then here we go. If we go to talk about the Fed a bit more, I'm going to come to that one in a minute. Powell signals more hikes coming while markets detect pivot. So the detecting of the pivot in here was, and I was looking at it earlier on, but where are we? Let me see if I can see it in here. But the actual quote, they got the quote in here, but he kind of hinted at, where is it? Okay, while another unusually large increase could be appropriate at our next meeting, that's a decision that will depend on the data between now and then. Okay, so the market took this as opening the door to moving back to a 50, right? Although in that language, okay, that's how the market took it. The market took that, and the pivot that the market is seeing is, okay, we've gone from 50s up to 75s. And now the potential is, are we going to drop back to 50s? And if I jump now to the CME Fed tool in here, we spoke about this yesterday. So this is now for September in here, and this is at 70% for a move to 275 300. Which is a 50 basis point rise. Okay, so the market now, predicting that there's a more likelihood we're going to drop down to the 50s. That's how the market read yesterday's statement from in the press conference from Powell, and so that was then definitely that's what they're talking about, this Fed pivot. Okay. In here, so Powell signals more hikes coming while markets detect pivot. Economists see hawkish messages and see 50-50 recession odds. Okay, well, I don't think the economists might say that, but the market didn't see that. The market saw this as a move now that we're going to kind of maybe move away from as aggressive. Okay, but then in here, if we look at someone from the economists, and maybe that's why we've dipped a little bit lower, as the dust has settled, because obviously the knee-jerk reaction was relief. The Fed are staying on top of it, but now backing off potentially on how aggressive they are on the rate cuts, and the market like that. Okay, and so we saw stocks surge higher. We took out, before the Fed, they were just consolidating. Even after the Fed decision, they were consolidating. It wasn't until the press conference that then the stock market shot higher. They were erratic and they shot higher. I took this as a real positive. Okay, but in here you can see I've actually highlighted further down in here. So this guy from Piper Sandler. He's noted, look, classical market reaction. So we saw, what do we saw? Jump in stocks and larger decline in short-term yields to longer-term rates. So that's the curve, right? Classical market reaction, one would expect if the odds of rate cuts had increased or their timing had been brought forward. So that's how the market reacted, basically, that we're going to get rate cuts, sooner rather than later going into next year, and that maybe the peak in rates wouldn't be as high, right? That's how they reacted. And if we go and take a look at the Fed tool, and remember, we've looked at this before. We go out into next year. So if we look, the peak in rates is expected near the end of this year. So look, 325 to 350. That's another 100 up from here. This is for December. Okay, so if we go to September, we're looking at another 50 in September here. If we go to November, so that was the, sorry, let me just go back to that. So that's at 275 to 300. If we go into then November, we're and the best chance is now 300 to 325. Okay, so that's 75 up, and come December, we're at 325 to 350. So the market looking at a peak in rates 100 basis points up from here, going into December. And then after that, February, we're still at 325 to 350, 325 to 350 as the peak, 320, and then here, look, 300 to 325. So even as early as May now, this has moved forward. Remember, this move in the peak was in June, okay? And now the move in the peak at 300 to 325, that's down from the peak, right? The peak's, remember, 325 to 350, according to the curve, okay? And now it's moving now to the May meeting. The May meeting is now seeing, so by the May meeting, they're looking for a potential cut, okay? I mean, obviously this is dispersed, so we've got a kind of a broad spectrum of potentials in here. But where the peaks are, we're seeing peak rates by December at 325 to 350. That's 100 up from now. And basically we're nailing on 50 next. So we're looking at maybe 225s or maybe a break and then a 50 by December. And then we're looking at the markets to stay, for rates to stay steady, 325 to 350 here, the peak you can see still through next year. If there's a meeting then February, and then by the March meeting, 325 to 350 in here. Okay, so by the March meeting, we're seeing potential for the market, and this is increasing here to 300 to 325. By May, the high is now 300 to 325. So we're certainly between March and May looking for a potential for the rate cuts to start coming in. So effectively, the market started to price in rate cuts, maybe the peak not being as high, and maybe rate cuts coming sooner. Okay, and that's how the market reacted yesterday to Powell's comments, not to the dot plot chart, which was released when the decision came. Okay, the dot plot chart is maybe telling us something different. So this guy in here and many of the economists and strategists are basically saying maybe the market. Oh, where is it? The Fed watchers, this is what this headline is. Look, Fed watchers say market got it all wrong on Powell pivot. They're saying Powell hasn't pivoted, right? That last night wasn't a pivot. The market has basically said, well, they think he has pivoted. So maybe in the coming days and weeks, we'll see Powell and maybe other Fed speakers start to step back, So actually, they've got to signal to the market what they intend to do. They don't want this to catch the market by surprise. So they need to get the market be clear about what's coming. So it'd be very interesting to see what we get coming up. It's going to be Fed watching as ever is important, but particularly important now because we have a little bit of uncertainty in the market. Effectively, these Fed watchers are saying the market is reacting in the wrong way. Okay, so it's going to be really important to watch Fed speakers over the next few days and next week in here. So just going back through, I'm going to wind all the way back to 5 things to start your day. So we've got Fed was obviously really important yesterday. Breakthrough spending deal between Manchin and Schumer. Okay, not really impacting markets. Meta platforms, we spoke about that. First ever quarterly sales decline, that was the concern yesterday. And Ford, I missed Ford as well. Ford chief said his company had too many people. He won't say how many plans to get rid of. Okay, I missed that yesterday. So Ford talking about cutting staff. And then US futures parried some of the stocks Fed gains back. So yeah, we had a big day up yesterday. NASDAQ was up about 4% yesterday. Big leap in NASDAQ. We were looking for it potentially higher on the call yesterday, but we're looking for the breakout. The breakout would have worked yesterday, so buying that breakout would have worked. But we have parried those gains, but not really by a huge amount. If we go and take a look at where we are, given the Nasdaq was up 4%. Sorry, this is European futures playing a bit of catch up. But obviously, we've dipped back lower again, so we're not up much in here. They were playing catch up because they didn't get that rally that was late last night. Yeah, markets were closed. The cash markets were closed. These are the cash markets. Okay, the real markets. They were closed come the Fed, so they didn't pick up the gains. But you look in here, the DAX is actually flat on the day. That's the German index, right? The CAC are basically flat on the day, and the FTSE. So these markets in here are effectively flat on the day. You're seeing a big rally, after they close on the futures markets, and then dipping back lower. If we look where we are though on the US in here, so we were up, nearly 1.5%. I think it was 1.5% on the S&P, not showing it in here yesterday, but the Nasdaq was definitely up about 4%. And then if we look in here though, where are we now going to stay? Well, Nasdaq's down 0.6, right? That's hardly a big down move considering the jump that we had yesterday. So it has parried some of the gains, but not a big negative in here. So going back to, I think that's 5 things you thought you'd done, right? Yeah. Busy earnings day. We've already spoken about that. Apple and Amazon, the big standouts in here. GDP. Core PCE. So yeah, we do have core PCEs there. Core PCE is going to be the focus, as we said. Just going to run quickly through this. I think I've gone through them. So Fed jacks rate again. Powell vows to no surrender in inflation battle. So they're telling us focus on inflation. So inflation keeps ticking up. They're not going to take this dovish step. So maybe the market's in for a bit of a surprise. I did say yesterday my view would be that they would maybe move towards a slightly more dovish stance, but I don't think they've fully signaled that. I think the market's taken that, but I don't think they necessarily took that. I agree with this. The Fed watchers in here. According to this article, wherever it was, that Fed watchers here, I agree that maybe the pivot, he hasn't pivoted. Maybe that hasn't been what he was trying to signal in here. Right, just moving through in here, a few other articles. So Fed hikes, we've already spoken about that. Bitcoin went higher, crypto broadly went higher. I know we're not trading crypto, but nevertheless, crypto with the whole risk on theme, we've got this positive correlation between riskier assets and cryptocurrencies now. That's been the tail of the tape for 2022 and crypto rallying with stocks yesterday, and oil gains as well. Help from the Fed as well, so oil up, the market seeing this as as all being more positive in here, a prospect of slower pace of interest rates. That's how the market read it. So that's positive for oil, right? So commodities across the board were buoyed, pushed higher, and also I think we had the inventory data, right? Yeah, stockpiles dropped by the most since the end of May. Okay, while exports rose to a record. Yeah, so again in here, that are more likely to rise than fall as the tightness of supply outweighs any risk of demand. So yeah, so basically the oil data as well yesterday was supportive of crude higher. And we've spoken about where we are today, and we've already looked at the dot plot chart. Right, let's go take a look at some charts. I think this is really important. I did this a little bit of analysis before we came on, just to get a little bit of ahead. So really important yesterday, the market has been flirting with this downtrend line. So we've already impulsively broke a week or so ago through this accelerated trend line that comes down. This is the S&P, by the way, if I didn't say that at the beginning. This comes down from late April, and then this one down in here from the end of March, okay? From the March peak through this peak in here from the 21st of April, okay? You see the trend line there. The market's been flirting with that trend line, and yesterday impulsively through that. Not only through that, but for the same sell-off from the March peak down to the low in here in mid-June, okay? You see there the 38.2% retracement. We breached, look, and we closed right on, and now we're sitting right on that 38.2% retracement. That's around 40.21, okay? So important. If we can get a close and hold above 40.21, that's a bigger bullish statement, yeah? That reinforces the bigger basing pattern. We spoke about the basing pattern previously when we took out that high there. That was up at 39.50, okay? And we surged through there. We surged through the trend line and took out that peak there. Since then, the market's been a little bit more hesitant the last week or so, but a really aggressive push higher yesterday to categorically reverse this downtrend line that comes off of that late March peak, but then also to take out not only to take out the trend line, but also the 38.2% retracement of the same down move. Okay, so that's a really positive step. The next big level, if I just zoom across a little bit in here, now this is obviously a bit sketchy data because this is when the market was very illiquid. It's from the beginning of the year. Okay, but there's the peak from the beginning of the year. If we look at the sell-off since the beginning of the year, that's actually the all-time high up there. The 38.2% retracement comes in at 40.81. Okay, a push above 40.81 would be a massively bullish statement. It would be above the 38.2% Fibonacci retracement of the whole sell-off. So that's a definite upside target, maybe going into the next couple of days. Let's get today, tomorrow. So let's take a look at the S&P in here. Now, look, market saying parried gains. Well, look, we gave up. We had that surge post-Fed. There's the surge post-Fed, right? And remember, this didn't come until the 7:30, right? So 7:30 my time, 2:30 Eastern, right? There's the whipsaw. You can see there's the whipsaw during the Fed decision, okay? And then this is on when Powell spoke. So it's all about what Powell said. And then you can see the immediate after the close in here. So there's the market going up onto the close. And then once Facebook came out, Meta, okay, then we dipped. Since the dip post Meta, okay, the market is effectively sideways. Okay, we did go a little lower. We're now actually rebounding. I mean, if you're aggressive, I'd say above these overnight peaks in here. Now they run around the 40.22 and a quarter, 40.21 and a half, and then here 40.24. So between 40.22 to 40.24, back above there, it all looks very bullish again. If it undercuts the low down here, then it's probably a little bit more worrying. Okay, so I think those are your overnight breakout points. I think are going to be important going into the open today. It's what it's how the money goes to work. How is the money going to go to work? Is it going to see this as the pivot? As the market reacted yesterday, and as the euro-dollar curve, the Fed tool that we look at, the euro-dollar curve, the money market curve is telling us that's what the market expects. It's looking for now a drop to only 50 in September. Is the equity market, when the cash market opens, are the fund managers and the hedge funds going to come in and say, yeah, we believe that, we're going to be buyers, right? Or are they going to be back in the camp of, the Fed watchers who are telling us, you might have got it wrong, market, right? And if that's the case, if that's what their economists are telling them, there'll probably be sellers in here. They'll probably be using this as a time to offload because they think the Fed are going to probably not pivoting and they're going to stay more hawkish, which then would mean we're probably due to be dipping back lower. So it's going to be interesting to see how this opens up today. And I think even a breakout of the overnight range. So as I say, up through like 40, 22, 24 or below the overnight low there, which is at 4,004, back through 4,000, it looks a little bit more vulnerable. Right, the analysis is going to be very similar. I'm not going to go through the full analysis. The only little concern on the Nasdaq, and I will put on the retracements from the top and from here. My only little concern on the Nasdaq, right, is we didn't take out the high. right? We didn't take out the high. So if we go to look at the back on the S&P, we were way above the high from last week. If we go to look at the NASDAQ, we stalled at the high. The high from last week is 12,698. Yesterday's high, 12,690. So we stalled at the peak there. That's the only little concern I have about the NASDAQ, okay? If we take a look at though, but the similar trend lines in here, the market's already through that. Let's try and take a look at the fibs, okay? I'll do a quick analysis on the fibs. I haven't drawn these on yet. And if we go from the... So here you can see we were already... Well, actually, we're flirting with the same... Let me just extend this out. Sorry, 1 second. And drag these and pull this across. 1 sec. Oh, wrong one. Okay. Let me just put that support line back on the low. Okay. You can see here the market has gone right up to 38.2. This is just of the sell-off from the end of March through to mid-June. Okay, it went up there, fouled there last week. So that retracement is pretty much 12,680. And as we said, the high last week was 12,680, 12,685. Okay, and the high last week was 12,698 and a half, and yesterday 12,690. So it's failing to get and hold above that retracement. Yeah, if it can get and hold above that retracement, it all looks a lot more bullish. Okay, for the Nasdaq. Let's then take a look at the... it's not going to let me do that. Let me just put on another retracement. I'm going to leave that one on. Let's put on another retracement to the very top. And it's the very high now. I think there's a little high there. And this one needs to be moved back down. And then if I click on here, pull this across. And what do we see? Then the 38.2, what I'm going to do is get rid of the 23.6s on here, because we're through those. Okay, and get rid of the 23.6 on here, because we're through those. And you see in here, there's the 38.2. It's all that, and it's actually look very close to the 50. So the 38.2 of the whole sell-off from this is actually from the end of last year. Okay, the peak on the Nasdaq is very near the 50% of the sell-off from March. Okay, and they're going to be around the 13,150, 170 kind of area. So that's a real upside to it. And then you've also got that swing peak up there. So at the moment, yeah, those are the bigger picture targets. Okay, so upside targets. I think we could hit those probably not in the next couple of days, but certainly going into next week. And that would create far more bullish signals. Let's go in now. I'm going to zoom out to the 15-minute. Here's the 15-minute. So there's the Fed move. Boom. There's the Meta move back lower. The market moving deeper, actually, much deeper compared to the S&P. And what I'm going to do here is put the fib of the Fed move. Right. Here's the Fed move. There's the low after the meeting, and there's the high. Okay. And what we'll do is we'll pull that across in here. Sorry, 1 sec. Sorry, guys. Okay, let me just pull that across 1 second. Interestingly there, right, so we've given up, look, nearly 61 point down to the 60. Actually, no further than that. Actually, this is upside down. Let me redraw that. I'm going to get rid of this. Sorry, guys. Let me get rid of that. I'm going to start again. Why does this always happen? There we go. So it's going to be, I want to do this way around. Okay, and what I'm going to put in here, so we've gone through the 78.6, but what I'm going to do on here is add in the 78.6% retracement. 78.6% retracement, and apply that. And you can see we've held above that 78.6. So we actually have given up over the, more like 75% of the post-Fed rally on the S&P. So that, on the Nasdaq. So that is a little bit worrying, particularly that move there. That's the Meta move, but we had this other move here. But we've got back a lot of that. So Nasdaq looking a little bit more wobbly. I'm not so happy with the Nasdaq. Again, the breakout's really the overnight highs and lows, I would say, really. So you need to get back above. I wouldn't feel comfortable buying it until it's above like 12,586. What's that peak there? 12,593, and then on the downside, if it takes out the overnight low, 12,480, it all looks very negative again. So really looking for that overnight range, breakout range, to then dictate where we go today, and that will give you the idea of where the flow is going to be, going into the balance of the day. Let me quick nod to the commodity markets, then I'll wrap us up. Let's go take a look at gold. Gold pushing higher yesterday. So on the back of this risk-on move, we did actually see yesterday. So the dollar has rebounded, but the dollar sold off. Okay, we went into risk-on mode. So dollar is a safe haven. Dollar sold off yesterday. So dollar was down, but look, the dollar has rebounded pretty much off of last week's lows this morning. This is the dollar index. So we go take a look at gold. Remember the gold kind of doing the opposite in here at the moment of the dollar. So the dollar sold off. So the gold rebounded. So yesterday and went back up and just nudged above the peak in here. Okay, and then this morning got on above peaks from over here. So it's a really positive statement by gold. We have dipped back lower. I think this dip back lower in gold. I think gold is slowly forming a base in here. Okay, so we had this little dip back lower, but there's the post-Fed move. Boom. Going to get rid of all this old analysis. But you can see in here on gold, you've got this basing structure we spoke about previously. I'm going to just zoom out a little bit so we got, because it's a very elongated base. Oh, we don't want that. Gosh. Oh, why did that happen? Oh, no, it didn't. Okay. Let me go to overview on the 30-minute chart. Yeah, so you got this elongated base. You see the market went up to these, took out these peaks here. Okay, so those are around, or that peak there is exactly 1744. So we took out that peak and then fell from below this peak in here. That peak up there is at 1751.7. Okay, but there's only a slight dip here. I'd be looking to buy into that. As whilst it's above, supports around 1731. Gold still looks positive, I think. So yeah, looking for the next turn high. I think this is a buy opportunity on gold. This little dip that we've seen in the last hour or so. So gold's still looking positive there. Let's take a look at oil. So oil's been choppy the last week. Big move down yesterday, then a rebound in here, push higher and setback. I've got no strong view in here. No strong view. I mean, on an intermediate swing basis, I'm bearish. I think this whole sell-off is intact. I think oil looks vulnerable to the downside. Oops, that's not oil. Shit, excuse me. Excuse my language there. Oil still looks vulnerable to the downside, yeah. But we have had a push higher. We are breaking this. A bigger picture, oil looking vulnerable to the downside. Right now, though, the strong rebound yesterday, the push through this trend line, I'd have to go with it from the long side on gold, I think. Yesterday I was still hanging on to a more negative view. We've taken out that peak there. I think that was important overnight. I had that as an important resistance. We failed at 99.00, and then this peak in here was, there's the 99.00, and we also had a peak over here at 99.53. Yeah, 99.00 and 99.53 were my levels overnight. We've gone above those. So for now, I think oil's bullish. Yeah. Oil could easily be back up to these peaks up here. So, 150, kind of 101 kind of area today. Yeah, so playing oil from the long side. Although bigger picture, it looks bearish to me. For now, I think oil's pushing higher, particularly if stocks go higher with it, okay? All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Thank you for the guys that come on live. If you've got any questions ever during the webinar, in the chat room, in the chat box live underneath where the streaming is. If you want to fire them in, steve@tradeday.com. Send them to steve@tradeday.com beforehand. I can run through anything you guys might want to look at. Wish you all a great trading day. Stay safe, and I'll be back with you tomorrow for the final bull versus bear webinar of the week.